All right. My favorite 2 hours of the week is here. Welcome to the Independent Investor Channel live stream. My name is Ryan. Feel free to shoot your questions into the group here. Obviously, got a little bit of a discussion cranking up already. Certainly want to set some stage. We've got some new folks, some new visitors into the live stream tonight. I just want to take the chance to welcome those folks into the live stream. Why do we do this? We do this every single week, and I think a lot of people on the onset would think that I'm a little bit crazy. I usually fill up 2 hours with nonstop financial discussion. Nonstop. Why? Why do we do that? We do that because the opportunity in the investing landscape has probably never been so exciting. And there's so much expertise out there right now. I think it's super important to provide an opportunity for folks to come together and offer their opinions. I really like constructive dialogue. I love furthering the discussion, and I think this is a platform where we can do just that. All right, so I want to welcome everybody that's making their way into the live stream. First and foremost, to the new folks that are coming in, catching live stream 69. I think you're somewhat lucky to find this opportunity. Okay. I don't get a whole lot of love through YouTube, and there's no love lost as far as I'm concerned either. My relationship with YouTube is a use and abuse relationship, to be honest with you. I'll use the YouTube conduit to provide incredible content. I am a content-driven creator trying to persuade people to understand that building financial security and building wealth is something that can be taught. It's something that can be scaled. It's something that anybody can participate in, especially now. We talk about those opportunities through the channel, and we earmark those opportunities. Barriers to entry that any new investor are going to come up to when they strike up a genuine curiosity about the investing opportunity, and they start to do some research on potential accounts to invest in. Okay. And what am I looking at, Ryan? I'm trying to find an account. What do I look at? What are the two options? What are the benefits? These are some of the things that we talk about and deliberate on in the channel. You're not going to get all the answers in a 2-hour live stream discussion on a Friday night. No way. This I tend to keep a little bit more low key, a little bit more relaxed, a little less scripted than the weekly uploads, obviously, but just to provide opportunity for folks to come in, offer their comments. Obviously, every week has a new offering, but I really want to try to make everybody understand, to keep it in perspective a little bit. Your portfolio really shouldn't define you. Okay. If you're doing this thing right, money should be one of those things that you have 100% control over. Therefore, the majority of your time should be spent doing other things with your life. All right. Now, if you're not at a place like that and you spend the majority of your time trying to pursue a better financial posture in your life, stick with the channel a bit. We'll take care of you. My ultimate goal is always to continue to keep the focus on the individuals that I'm looking to reach. And that's why I tend to take a little bit longer to focus in on new folks making their way to the channel. I can't tell you the amount of value that I put on the relationships that have only been made possible through YouTube. And I just have one of my favorite people pop in here. I see her has popped into the community with Quick Notes Media. So good to see you. I'm so glad that you've made your way in tonight. But I feel that way about a lot of folks, that this opportunity has brought me, in front of those folks, and it's worldwide. I was just speaking with somebody tonight from over in Europe, and they were talking about their gratitude in the M1 finance platform, just from an awareness perspective. Obviously, it's not available over there just yet. But when those floodgates open, man, we're going to open it up for sure. And it's awesome to be educated up. Hopefully, those opportunities start to roll out for folks, because I really try to keep a perspective and understanding that we are putting this message out worldwide. There's a lot of folks that tune into the message and try to extract and pick up little tidbits of information that they can use in their daily lives. And if you pick up just the smallest aspect of what I'm talking about and what I'm throwing down on, and what I actually live every day, because I am very, very adamant about this point. Finances should not control you. It's something that you can control. And I see this all the time. I really am very interested in the investing landscape. I understand everybody's all up in arms about Tesla. I get it. I understand, and I don't mean to be a damper on the party. I don't. But I think it offers a fundamental lesson in looking at the amount of risk that you're taking in your portfolio, not just with respect to a name like Tesla, but understanding how, if it's a stock that you want to invest in, not to overexpose, in that, yeah, it's great to be invested in it when they report earnings and it shoots up, $75 a share. Today was a nice little topper. Tesla is a company that I really, really like. As far as an investment and a stock, it's one of those that I don't like. Okay. So it's interesting. I'd like to keep the conversation somewhat curtailed. Obviously, there's a ton of folks in here that want to, and for the folks that have invested in the stock, I'm all about it. That's great. You guys made some killer profit. I'll take my 8% with Goodyear Tire, which is my stock of the week. And I will also give a shout out to Gen X Dividend Investor, who just released a video this week. I think it's a product worth checking out. He has offered Leggett and Plant as one of the stocks in there. I thought that was an excellent, excellent choice to roll out to the community from an awareness perspective. Mimi, thank you so much for that. I really appreciate it. We need to talk. Thanks for coming in. I really appreciate it. But again, the channel's growing. It's growing nicely. It's growing in a way that I would expect that it would grow, making the relationships that we are through the channel and the opportunity. I really think some of the subscriber base is starting to share the message and bring some of those folks on. We have a couple of those folks in the group here tonight. And I thank you for that referral from Doug Whitaker, who's invited a couple folks in the live stream. Bring them on, okay? Because here's the thing. I'll throw out fundamentals with investing, and those fundamentals will apply to everybody. That's the beauty of it. And if it's not one of those fundamentals that I feel like is scalable, I typically don't focus so much on it. Okay. Because if I can't make it relate to an individual that's looking and genuinely interested in furthering their financial fitness, then it doesn't really have a whole lot of meaning on the channel here. Okay. There's plenty of other things that we can focus on to get those folks steered in the right direction. What does that mean? It means building a portfolio, taking on as much risk as we can that's reflective of someone's risk tolerance, okay? Getting as much return out of that portfolio, and subjecting that portfolio to as little risk as we possibly can to take on that, to gain that appreciation. That's the key balance, okay? And I think what's interesting about owning large beta names, and I did hesitate on putting my review portfolio out there for Zane, reviewing the very top heavy growth portfolio this week. If you don't know what I'm talking about, you guys can go back in the catalog from this week and check it out. It's the mystery portfolio. I used M1 Finance as just a tracking tool, basically. I didn't have the entry and exits on those stock holdings, which is totally fine. But the thing about it is, each of those individual 11 holdings, and Tesla is a perfect example of this. is it's really, really difficult to anticipate a rate of return when a portfolio is heavily levered to that type of growth. Okay, what do I mean by that? I've got J Mac in the group, and I'll give my channel shout outs here shortly. But for the folks that are looking for a highly levered growth portfolio, awesome. If it works for you, great. In this environment, you guys can probably trip and fall in your growth portfolios and make money. I'll applaud you, okay? I'm not going to be a Debbie Downer. What I'm saying is, are there things with regard to investing that can be foreseeable? Can they be predictable? In my opinion, there are. A dividend, in my opinion, is a predictable phenomenon in investing. Okay. And folks that are new to investing who don't know what a dividend, it's basically a guaranteed payment to own the stock. Okay. In all simplicity. And you can earn your dividends through a lot of different methods, whether it be owning an ETF index fund, whether it be owning a single stock. Okay. Those dividends are somewhat predictable in nature. Furthermore, if you're going to own an ETF or a broad market index fund or ETF, you can look at the historical performance and use historical performance to anticipate a rate of return. What does that mean to us? If we're starting out with an amount, let's say $500 or $1,000, and we want to dollar cost average that, which means that we take $50 or $100 and we drop that into the account, we're continually fueling the fire. Okay, for a lack of better terms, we can anticipate those types of strategies, right? And you start to build upon those strategies. So you've got the 5 or 1,000, you've got the $25 or 50 or $100, whatever you deem appropriate for you. Those are set schedules, and you start to build those on top of each other. Okay. Then we start to look at certain assets that will return us an expected rate of return. Okay. And we use the S&P 500 as a benchmark for that. The VOO is a perfect example of that benchmark that we use to anticipate those rates of return. Does owning Tesla allow that level of predictability in your portfolio? I'll let you marinate on that for just a second, okay? Again, you can probably trip and fall in this market and make money, but I have been able to sleep easy ever since I've come out with this channel 3 years ago by offering a different perspective about the stock market because I've seen it. I've been invested for a long, long time. And I don't know if we're in the euphoria stage now. I don't know. I don't know if we're in the later innings of the game. I don't know. Okay. I have my own personal feelings about that. I believe that we are. Uh, does it mean that the stock market's going to go up forever? I don't have an answer for that either. Okay. Traditionally, over time, the S&P 500 has tracked upwards and provided and rewarded investors who have invested passively, okay, in the index over time. It's provided wealth. It's a great wealth creating opportunity. But here's the thing: when this stock market starts to get cranky and it starts to really affect those highly levered growth portfolios, what predictability are you going to fall back on? Okay. Are you going to expect like a company like iRobot is going to pull that portfolio into some level of predictability? That's a rhetorical question, that of which you can answer for yourself. I just pose that question because I'm pretty good at it. Okay. I'm pretty good at offering a perspective of what if. What if? Okay. Would you rather have a high growth beta name in the portfolio in the event of a drastic drawdown in the stock market, or would you rather be holding a company like Home Depot? There's a lot of overvalue in the market right now. I mentioned Home Depot as one of those. Costco, I actually throw in the overvalued category right here. I know I'm going to have some tomatoes thrown at me through my computer. And that's totally fine. I just can't see entering it right here. I just can't. So, and do what you will with the portfolio, but ask yourself this question. And anybody, these are those fundamentals. that I throw out there that can be applicable to all investors, no matter how big, no matter how small. Okay. Sit back for a second and ask yourself, what type of investor do you want to be? Okay. If you want to own all growth in the portfolio, awesome. Please understand the amount of risk that you're taking on by exposing that much capital to that much risk in the stock market. And a lot of folks in the group here, they have that level of risk tolerance to the market, I think. At least it's perceived by me that they do. And if there's anything that I would stress for those folks, I want that risk tolerance to be there for them. Um, you'll only know that it's there when you're tested, okay? Because you can blah, blah, blah talk all day about how awesome of an investor you are and how much risk tolerance you have to a drawdown in the stock market. But a drastic drawdown in the stock market will do some funny, fickle things to people. It really will. It will separate the investors from the non-investors. And I don't mean to, again, to be a bearer of bad news. But when the stock market is doing this type of thing, I think it is worth spending a few moments on comparing where you are, what you want out of your investing style long term. Okay. And I really want to circumvent some of the lessons that I've learned in my life by being completely levered to the stock market, diversified, yes. But the big mistake I've been subject to in my life is not having enough cash on the side. Again, another fundamental nugget for you. You know, the amount of money that you have in the stock market does not define you. Okay. This is what I allude to all the time when I talk about the topic of money should be something that is so controlled and so um, understood by you as an individual investor that you spend as little time as possible talking about it or relying on it or you know, defining your life based on the amount of financial capital. I really want to empower individuals to understand that that financial security, yes, is there and it's something to be acknowledged. It's something to be proud of, but let it go. Okay. It's just going to be there and it's going to provide you all of the benefits and all of the responsibilities, quite frankly, that a well built portfolio will provide to new investors, man. So have some perspective about this stuff, guys. Please, please. Um, this is an interesting thing. You know, we've got some channel creators in the group here. I do want to go down the list because there's a ton in here. But the first couple that popped in, Hidden Freedom Investing was number one. Definitely want to give a shout out back in the great Northwest, where my roots are, absolutely. And also Ryan Giffen, who's popped in here, who I had the pleasure of speaking with on a collaboration. JMac Investing is doing a Wednesday night live stream. So I always want to plug my brother Jason with JMac Investing. Um, bringing people together. Come on, get with the program, guys. All right. I'm going to ask for your assistance a little bit on picking one thing that you're deficient in and cleaning it up. Okay. I'm not asking you to do something that I don't do myself. Okay. I'm not. Okay. I'm not a hypocrite, but investing is one of those things that we all need to clean up a bit. Okay. And this is something that either wealthy people have the advantage of by not having to be a financial steward, or they do this all the time, which is why they're wealthy in the first place. Okay. Folks that need to work on this stuff because they don't have a lot of financial capital in their life are pressed and need to figure this stuff out. You do. And it's doable. It's doable, guys. If you have somebody like myself who's willing to break down some of the barriers to entry into the stock market, which I'm more than happy to do for folks, I can speak until I'm blue in the face for 2 hours straight every single Friday. And to me, that's a glimmer of time. It's a glimmer of time. But you want to know what it means to me? it gives me the opportunity to say I did everything that I possibly could to help those folks. All right. I spoke with somebody who was homeless today on my way home from work and wanted to explain to me how they were trying to buy a bus ticket back to Maryland, right? And I said, "How much does it cost?" And he was like 175 bucks. And I knew in my heart he didn't have any money at all. He asked me for money, and I don't carry cash. If I did, I would have given it to him. But it makes me kind of wonder about the spectrum of where people come from and what they value in their life. Okay, and this money topic is a really funny one. A lot of people just don't like to talk about it. They don't. It's nobody else's business. That's why the barriers to coming onto YouTube and maybe potentially sitting and catching a live stream or asking a complete stranger about certain aspects of your own portfolio. And I've had some guys spill their guts to me, guys. It's interesting, and my hat's off to those folks. I've had a few comments come through this week that kind of got my attention a little bit. One of them said, "I'm trying." And that was the only comment. It said, "Ryan, I'm trying." It was like, wow, if I read that correctly, it means that you've taken that first step into something a little bit more grander. Because I can tell you what, guys, the majority of the people, I'm 42 years old, the majority of what I've seen in this life is that most people don't even want to take that first step. They don't. All right. So, welcome to the Independent Investor Channel live stream. I did have GW Life TV in here, but I guess they're kicking off to go to the pumpkin patch tonight with the family, which is a heck of a lot more important than coming on here and hearing me rap about finances. But I definitely give a plug. I pinned GW Life's comment on my M1 finance video because it was very, very good. I've got Gen X dividend investor here. I want to make sure that I get to everybody. I don't know if financial foundations. I'm seeing you in the thread here as well. So honestly, guys, if you go in, it takes a couple seconds to go, and when you're a channel, I mean, financial foundations could have 100,000 subscribers. I wouldn't know, but if the message is good, certainly want to kick over and help those folks support their message. You guys know I'm all about it. Stock investor guy. That's pretty cool. I see the pillars of the New York Stock Exchange. I've actually been down on the floor not once but twice. That's where the photos at the end of the YouTube videos come from. So I just want to welcome everybody. I absolutely have a ton of topics tonight to talk about. I will try to engage with y'all. He says 1 billion subs. Well, I'm sure they're all good, I value the strength of relationships, okay, not necessarily the subscriber base. It's spoken like a true champion, a small YouTube channel with going on 20,000 subscribers, but I mean that. I freaking do. I don't. This YouTube opportunity, I'm a little bit interested in this YouTube opportunity. I've been pushing out daily uploads more as an experimental than anything. And it's really been interesting to monitor how the ad revenue is paid to a small content creator like myself, who is very, very adamant about the quality of content that I'm pushing out. Yes, a lot, but very, very important in understanding the impact of the message that we are putting through. So I've got my chai tea. I hope you guys have a beverage of choice, please. So sit back and enjoy the next couple hours. The Independent Investor Channel live stream, again, welcome to everybody. And we'll get to some of these individual questions here in just a second. She says quality over quantity any day. Well, Mimi, if I was in a professional studio, we'd be throwing down. And quite frankly, I belong in front of an audience. I'm one of those rare cats that learned how to public speak at a young age, and that's one of my passions. And if I could speak to people in person, I think that would be awesome, because this is still kind of one-sided, but it's about as engaging as I can get with the YouTube opportunity. And I thank you guys for coming in and helping me participate. All right. So I'm going to cruise up here to the top of the thread. I just got a lot of friends of the channel, honestly, big community here, family community, to be honest with you. But I do want to cruise up here and hit some of these folks. He said Ryan Giffen, he threw down on Tesla. I guess Ryan's a investor in Tesla. I think long term, I think you could be fine in the name. I just, I'd control the allocation. That's my little the 2 cents. I'm not tempted at all to buy Tesla, to be honest with you. That it's fun to watch it go up, and it's fun for folks that are taking that risk to be paid for that risk. But no thanks. I'm having a hard enough time finding value in this market, and I'm holding true. We were up about 1/3% today, just shy of $700 today. It was a killer week for me. Just kind of holding, doubled up on some old old oak positions. I'm doubled up on Cisco today, doubled up on Pfizer, PFE, and yeah, just kind of monitoring the portfolio. Took some off the table with Apple computers. I've got a video coming out tomorrow, not to toot my own horn, but it ought to be pretty good. It's very interesting. It chronicles all my trading profit. So rolling that out for you guys just as a little bit of a foreshadowing for tomorrow's release. It's already filmed, ready to rock. Somebody said I was the hardest working man on YouTube. I must be, because I think I'm making about 4 cents an hour. So awesome. Only in America. 4 cents America. Yep, the American dream right there. Now, the intent on the channel is to reach people, and that's what it's been since day one, and that has not wavered one single bit since the inception of the channel. We'll continue to do that. Absolutely. All right, I got the one and only Doug Whitaker, who comments on Elon Musk and says he's a moron, rich moron. Yeah, I don't know. There was an interview with actually a board director today, and I was going to find the link for you, Ryan, and kick you over to that. But that when they were asked about the mystery beat that shot the stock up, the board member couldn't explain where that came from. So just to let you know, there's no company out there that is immune to poor accounting practices. Neither is Tesla. So we'll see what happens. Let this wear off. This too shall pass. But for those folks that made a little dab on it, I'd sell it and wait for it to come back in a little bit, because this is a little bit too far, too fast, in my opinion. Hidden Freedom Investing added a few times this week on J&J, and I had another one of the members of the community here asking about J&J. I'm holding true. I own 22 shares of the stock here, holding true on J&J. Little disappointed about their posture here. I'm not sure what they're waiting for. They may wait a little bit too long to do the right thing. We'll see what happens. But as a shareholder, I'm holding the company. I'm not dumping the company based on this. But headline risk, obviously going on, some headwind with J&J, may provide a buying opportunity. I mean, right here, the stock is a buy right here. But that doesn't mean that it can't adjust back a little bit as it's pushed down with some of this headwind. So we'll see what happens there. But I appreciate that question. Really good. I'll cruise down here. Crypto. That's interesting. I love these different perspectives that come in here. Not a crypto owner. I do believe in the technology, but where do you start? Maybe Libra. Picked up some Facebook, traded it twice this week. Now we're back in it. Facebook reports next week, Wednesday. So we'll see what happens with that. I'm willing to take the stock into a downturn, but I don't think that's going to happen. I think they're going to surprise to the upside, if it's any surprise at all. So we'll see what happens there with Facebook. But we entered 30 shares into the position today, back into the position, and CRM Salesforce as well today. Generated some nice trading revenue today. But just to give you guys a premise on the video that's being released tomorrow, 121 stocks traded hands in 2019. 18 stocks were for a loss. 121 of those stocks were for profit. 86% of the time we were able to execute trading of those stocks for a positive. So I'll chronicle that tomorrow. So make sure that you tune into that video, help us support the channel. I just think it's interesting. I actually rewatched the video because I thought it was pretty good. The channel creator did a pretty good job on it. So catch that tomorrow. But 86% winning percentage, I like it. Not to toot my own horn, but this is a money game. This is a statistics game. If you're not rendering profits in the portfolio consistently, I would stand in front of the mirror for a while and ask some rhetorical questions. Perhaps maybe you're over-levered, deploying the wrong strategy. Maybe you need to do some alignment of the strategy that you're deploying with what you want out of the market. Okay. The market is a wide open landscape of opportunity, but you have to be able to control that opportunity in some form or fashion, basically that makes sense for you. And that's another comeback for some of these new visitors into the live stream tonight, man. That's the key. Ask yourself, do you want to start slow? Start defensively. Start with an account that makes sense to you. Yes, that puts you in the driver's seat. Yes, self-directed. Align the products that make sense for somebody who doesn't know a whole hell of a lot about the stock market. Those products are out there and available. You betcha. Stay with the channel a little bit. The only thing you may get out of the next 2 hours is a life-changing message, and I've got an hour and a half left to change your life, and I intend on doing just that. All right? Good stuff. Okay, I've got Mr. Bob Wright in the group here, man. Good friend of mine as well, from the Great West. God, I miss it out there, man. And then J Mac. That was a lot of fun on Wednesday, actually. Jason, thanks for letting me pop into the group and offer some questions. I really wanted some genuine questions answered, and you guys came through with style. Had a couple channel creators in there, Rico Suave Investing, who probably has more energy than anybody I've ever seen, which will go a long way on YouTube. All right. And then Matt Money, who I had a really awesome exchange with this week. He actually got under my skin a little bit, and he knows it. But I just, here's the thing. If you come onto the channel and offer some perspectives, you're going to get an honest response from me. No doubt about it. And I think I think it was really cool. It was really cool. We had kind of had a going back and forth a little bit on swing trading and long trading, and that's actually what prompted the making of the video for tomorrow, because it's swing trading profit that I'm declaring to you guys. But is it really important? I think if you can take just one card out of my playbook, it's this. Be dynamic in your application. All right. You can do all kinds of different things that'll work for you in the stock market. There's all kinds of different things that can work. Dividends, yep, it's one aspect that can work. I've generated close to 17,000 in trading profit this year. Does that work for me? Yeah, it works for me. I'm very, very aggressive on seeking out those opportunities. Does it work out all the time? No, it doesn't. But would I have been able to render those profits if I was tunnel visioned in my application and sticking with one philosophy and strategy in my application? No. Does that mean I would be wrong in doing that? Not at all. Not at all. The only reason I put that out there is to make you think a little bit about the prospects across the landscape of utilizing the stock market as a wealth creating machine. It is awesome. And the more you can put those machines in there, okay, the more you're going to drive toward that ultimate goal in investing. And for you guys that have waited 34 minutes for the ultimate goal in investing, here it is, just in case you're wondering. I came out with a video this week talking about assets. And What really escapes people, regular people who don't think that they can pursue wealth, they don't have wealth, they think they can't pursue wealth. Here's where they're deficient. They're deficient in taking their inflow, what little or as much as they can get, because I know folks that make six figures that are a disaster. They don't get this equation, okay? This missing link. You have to be able to build up a portfolio of assets that have the ability to fund your life without you having to trade your time for income. That's the secret, okay? What I mean by that is your assets should have the ability to pay you eventually in life. Now, while we're going through these phases as an investor, a beginning phase investor has the hardest time looking at these accounts with $1,000, $5,000, $10,000, and it's like, Jesus, what's going on, man? This isn't moving. I go through this deliberation most every week because for the new folks that come in, they'll be able to relate to this if they've started their investing career. And they're just like, Jesus, man, this guy got me all fired up about investing. I found this awesome account. This is great. $500. This is amazing. And 10 days go by and it hasn't moved. That's the hardest phase. Okay. And I'll be coming out with a video on the phases of investing, phase 1, 2, and 3. I'm in phase 2 right now, and it's like a no man's land. It really is. It's really interesting. Yeah, those dividends are pumping back into the account, and it's like, interesting. I'm kind of hoping to move into that phase 3 where the compounding effect really does pick up and start to accelerate my wealth. But I may have to rely on generational wealth for my portfolio actually to get to that phase 3, but we'll see. We'll see. But that's the fun of it. The idea is to get to that point, and this is a big reason why I invest, is to get those assets to a point where you can turn the dividend reinvestment off potentially and have that outflow from the assets fund your lifestyle. That's a beautiful thing. And not everybody's going to get there, but I contend that a lot of people don't even want to try. All right. And that's what we're all about, is seeing how we can leverage those assets to maybe potentially pay yourself later on in life. Very, very important. All right. Jesus. Well, Tesla. I dug with. So Vincent Ramirez is one of the folks that's made their way into the live stream, and I don't mean to call you out in front of everybody, but I do just want to say welcome. And if you do have any questions, throw them in the group. There's a ton of channel creators in here as well, and I'll try to do my best in offering an answer for you. I'm afraid to buy the companies that have actually made money, but it is exciting to watch. I agree. I'm just not getting too aggressive on overly buying right now. I actually did a little dab of selling this week. I thought it was prudent to do so, and we did. Probably ill-timed, missed out on a touch today. That's fine. I mean, we were still up $700 today. That's fine. It is what it is. Whoop-de-doo. I'm getting a little bit more aggressive on trying to really keep my thumb on the pulse of the stock market. Everybody's saying now that a recession is off the table. Where do they get these people from? It's like they hire all the bulls when the stock market's up 200 points to come onto TV and talk about how awesome the stock market is. No, it's not. There's no such thing. It's just the stock market, and it could go down huge next week. Am I the only one that thinks that way? Please help support me. Please. Nobody knows. A recession's off the table. Get out of my face. Good grief. I just don't know where they get these clowns. But as an individual investor, man, we can do what we can do to protect ourselves, be defensive in our applications, use scale in the market, take profits where appropriate, and live to fight another day, because I, for one, don't trust it. And I've got a pretty good amount invested in the market, but it's indicative of where I am at this particular time in my life, and that's fine. I could lose my entire portfolio tomorrow. I'd still be the same Ryan. All right. I don't know what videos I'd put out. I wouldn't be having any portfolio reviews. I guess I could. I guess I could roll out some portfolio reviews with no money in there, but how interesting would that be? Anyway, all right. Yeah, I'm using caution here as well, and it's worth repeating. I understand everybody wants to come in and celebrate making all this great money hand over fist, but I do just caution everybody to, um, you know, use caution in this market, cautiously optimistic, at least throughout the year. I think seasonality, I mean, last year, look at how big of a downturn it was. Last Christmas was kind of a downer. There was no seasonality last year. And then folks really, really got caught off guard at the end of last year. Could it happen again? Sure. Is it? I don't know. We'll see. Just make sure you're prepared accordingly. All right. All right. Thanks for the videos this week. Made some adjustments to the fixed income portfolio. So I can't tell you how much I enjoy Greg coming on and leaving his comments. The comments are awesome. They're really good, really insightful. He picks up stuff from my video that I hope a lot of people pick up on, but I don't think they do. I really don't. And my hat's off to Greg for actually picking that stuff up and throwing it back to me in the community discussion. Usually very, very insightful. Um, I'm not sure if bonds aren't going to underperform a little bit for the remainder of this year. That's my thought. I actually think we're in a risk on environment here. I really do. Look at the action in Amazon. Really interesting. I was actually thinking about buying it when it was 130 down. I should have after hours. I mean, I have the money to do that, but I didn't. I deployed some discipline and didn't. Probably could have taken $1,000 pretty easy on a swing trade in a day there, but didn't. Coulda, shoulda, woulda, right? But I just Amazon. I really think there's more investable companies out there. Again, if you were wanting to invest in Amazon, I would just keep it in check in the portfolio. I really think that, a little bit of exposure to it is fine. If you're working with an M1 finance portfolio, you could enter into some partial shares there, and seek your exposure that way. But I'm currently not in Amazon, nor do I have any plans of entering into Amazon. Like I said, the growth that we picked up here was Facebook and CRM Salesforce. Number 3 on the list would be Google. Number 4 on the list would probably be PayPal. However, I had a very, very disheartening conversation with PayPal this week. The rules of engagement with regard to their fees have changed. So if you channel creators are looking for an idea to put through the YouTube community, by all means, do a little research and check out what I've found out with their fees. Got ripped off pretty much by PayPal. I'm pretty upset about it. Um, because when I called their customer service, they gave me the runaround. I should have recorded the conversation. It was pretty awesome because I was not happy. So anyway, that's PayPal. But from an investable perspective, they just went over 1 billion in transactions. That's pretty impressive. I don't own the stock here. You guys know I'm in Visa, which is slowly making me wealthy. No big deal. Yeah, that company's just a beast. I love it. One of my favorite technology companies, actually, and it's one of those stocks that I invested in a couple years ago, and I sold it for a very, very good profit, and then bought back into it with the thought that I would need to take it into a downturn. And it just has continued to go up ever since I have owned it, and it's kind of turned into a cornerstone in my portfolio. It's one of those that I don't even look at, to be honest with you. I just don't look at it. It's that good of a business. Doesn't pay that big of a dividend. I think that Visa is really into share buybacks, which is kind of disheartening, quite frankly, from my perspective. I'd rather see some of that cash flow come back to me as a shareholder. But anyway, Visa's done quite well. But PayPal on the growth side, Adobe Systems would be number 5 on that list in the growth aspect. If you guys heard me mention NVIDIA a couple months ago, you would have made a small fortune. I should have taken my own initiative there. That would have been nice. But it's fun to talk about and be aware of these. But, when I looked at the portfolio today, look at the action in 3M, very satisfied. Best performer in my portfolio. I don't know from a percentage wise, but I was very satisfied with Intel. Where'd that come from? Yeah, I'm very satisfied with that. So 50 share position in Intel. I'm very satisfied with its quarter. And again, we'll continue to own that. I'm really underweight technology right now, but as an aggressive investor, the recommended allocation in the portfolio is rather high for me, and I'm not quite there. But we'll continue to work that out. There's just a lot of companies right now that I just don't feel like I want to go overboard with the purchases right now. I'm satisfied just staying true on my program and being an investor, fighting another day. That's fine. I'm good with that. Okay. All right. Let me cruise on down. I know there's a huge thread below this. I've got Pelt Work who says I've made 60 in the last 2 months just starting. Those wins when you start are just awesome. Those are the little sections of validation that you need. Just keep in mind, I'm going to use this comment as a little bit of a lesson opportunity. Just keep in mind that the evolution as an investor is you really need to become numb to watching your money fluctuate. You really do. Okay. Because the other side of that coin is if you were down $60, would you have come on and offered that in the thread and said, hey, Ryan, I'm down $60. What do I do? That type of thing. That stuff's going to happen as an investor. You really just have to understand this fundamental truth about the dollars that you've asked to be invested dollars is they're going to act like invested dollars. So don't be surprised when they're doing what you asked them to do. Okay? Invested dollars are going to act like invested dollars. Let them act. Okay? The way to buffer that is to keep a cash buffer on the side. Some other things, maybe making a high yield in the account, something like that, keeping that cash on the side for a rainy day. Always looking to control your level of exposure to the stock market for reasons like this. That's awesome. You can look at the account and say, hey, I'm up 60. I got a touch of buffer. That's good. But I'm telling you, starting investors, beginning investors may have a pretty big test coming up around the corner. And it doesn't do anybody any good to ignore the prospects of that potential. Let's talk about it and be mentally prepared to understand that may happen. Okay. The way you do that is I've got $1,000. If I went into a severe downturn and we were down 20% approaching a bear market, and now I'm down $800, how would I feel about that? Run yourself through that deliberation. How would I feel if it went down another 40? How about 50%? Half-life. What would happen if my portfolio was suddenly cut in half over the course of a volatile couple months in the stock market? And now you're looking at it going, wow, I'm not really sure about this investing game. This really isn't for me. I don't understand. Well, here's the tough love. You can't have it both ways. Okay? Can't have it both ways. As an investor, you have to take your goods with your bads. And I could come on here and put videos out about how excited about all the money that I made this week and blah, blah, blah. I just don't put value in that. It misleads people. It does. People come on here and they see, I'm all excited and therefore they can get excited too. And they can have render the same, successes that I've had in the market. Those successes are done. They're done. Today is over. Those successes are done. Those profits could be scrubbed on Monday just as easily as they came today. Okay? That's real talk. And expect the unexpected and plan accordingly. Okay? That's where I offer that defensive perspective in the market. The market is very, very rewarding, and it's a place that I believe everybody should participate in some degree. But I see some really interesting overexposure and It's gonna bite some people. It really will. You'll see. Mark my word. Sorry to be the only one on YouTube talking about it. All right. Volume and GP guys are still going. I got Guts Berserk in the list. That's a cool screen name, man. I like it. I just found out I can roll over my 401k into my Roth IRA. Now that means my contributions for that year will be well over 6,000. Yeah, double check that. All right. I've got Mr. Jared Odell in the group here. Appreciate you making your way in. That's awesome. Gen X investing. I got to catch the new video for Leggett Plant. Man, that's really cool. It's really encouraging to see some of those names come out through YouTube. I'm really kind of sick and tired, to be honest with you guys, talking about the same tired freaking stocks over and over and again. You know, somebody asked me tonight about Allison Transmission. It's like, yeah, I looked at the stock. Price to earnings is good. Now you're thinking, you know, how about Ingersoll Rand? You know, how about Illinois Tool? These are great companies, by the way. Stanley Black and Decker was the other one that was mentioned, you know, Tractor Supply Company. These are all good companies. All right. Yeah, man. That was pretty cool though to see Gen X come out with that video. That was awesome, man. That got my attention for sure. Good stuff, man. Anyway, qualified dividends are my best friend. I concur. Vincent Ramirez says this is awesome. I'm not sure. Yeah, I mean, I aim to change lives every Friday, so it's a lofty goal, but that's all right. You know, for the few folks that make their way in here, we usually have about 1,000 replays, but average view duration on the live stream is about 25 minutes, which I'm pretty proud of, to be honest with you. But I'm not going to come on here and talk for 25 minutes. That ain't going to happen. So, Mike, the give back to me is to allow me to talk for my 2 hours, get my fix, and then I'll leave you guys alone for another week. Actually, that's not so true. We're doing daily uploads now, remember? Yeah, running a little experiment on the Independent Investor channel. That new mic is sweet. It is. It was an investment in the channel. Made all kinds of investments in the channel. If I could get into a studio, I think that would be way better to provide a little bit better quality content. But I think the sound, the lighting is good. Audio quality is not too bad. So I'm satisfied. It does what it is that it needs to do right now for the plank owners. Anybody less than 20,000 subscribers on this channel, we're a very small channel. We're very unknown, and then that's fine. I you know what? How are you giving financial advice with blinds in your back behind you? How are you doing that? That's crazy. Like, you don't have a suit and tie. That makes you a better investor. Yeah, no, it doesn't. Just another cliche that I do not buy into. Yeah. You want to know what makes you a successful investor? Jesus, this is like 10 YouTube videos, man, I could come out with, but it really comes down to a few simple things. Be willing to learn, be willing to be wrong, be willing to be flexible, be willing to be self-assessing, critical of yourself. Don't get over your skis. Um, don't get arrogant. Don't think that the stock market can be consistently beat. Okay, it can be beat, but don't don't allow it to sink into your mind and govern how it is that you approach the stock market opportunity. It just is that. It's an opportunity while it pays, and it works while it works. But when it stops working, it's an eye opener. Okay, so you got to include your son more in your vids. Ryan Griffin, it was awesome to see him. That's really cool, man. I like that stuff. Jared Odell says this market is crazy. There's a lot of genuine in that comment. I'm baffled. I've been doing this a long time, and if this isn't euphoria, I don't know what is. Makes me want to work even harder to preserve this wealth that we've grown, basically just been given, honestly. And always reassessing those stocks that maybe I'll have to take into a downturn if this market does topple over, which, if you want to know my honest opinion, I think we're turning over right now. Yep. I think there's cracks right going on right now. I think there's underlying problems, systemic, with this market. There was a quick headline today on the national debt, which you guys know I've declared to you as probably being the number one thing that I'm concerned with. Um, Ironically, it doesn't fit with my thesis that I feel like financials and energy are two of the most exciting sectors right now. When I look for value, I find the majority of my value. Now, I own most of the financials big five, minus Goldman Sachs, which I honestly almost hit the buy button today. But I took my trading block back in BlackRock, BLK. But energy, Valero, Total, ticker symbol TOT, um, Marathon Petroleum, Marathon Oil, some really good names jumping out there. I think there's some good stuff in energy. So there is some value. Those are the ones that look the most attractive to me. I'm a big, big fan of industrials. Industrials is one of those sectors that I look over, and I'm so excited on the majority of the names. I took profits in Raytheon just to cut back some exposure to industrials. Probably will be a dumb move because such a phenomenal company, but I kept LMT and Northrop Grumman, and along with my other industrial holdings as well. But John Deere looks really, really attractive. Caterpillar right here reported a terrible quarter, terrible, and it spiked up today. Must have got. I didn't get to dig into the actual quarter itself. I was surprised that it went up today, but it did. But industrials looks really, really good right here. Very attractive. Um, I've got the financial investor here in the group here. Definitely always gets a shout out from me. Good evening, Brent. Really appreciate you making your way into the live stream tonight. Sorry it took so long. I'm not even halfway through this thread. I saw a bunch of comments pop in here, so I do apologize for that. Picking up some J&J here. K97 is offering some opportunity there. I agree. I think it's a buy. If you were ever looking for an entry and a spot in the portfolio for some J&J, I'm holding my shares. But technically it looks good. 12 times, I believe we're looking at on J&J. So pretty interesting there. Yeah, I think that's very attractive. Yes, the market seems to be heating up, Vincent Ramirez. I think it's going to heat up into the year's end. And man alive, we've got an election coming up next fall. It's going to be very interesting to see how this thing plays out. All right. I got Chris Cobian in the group. Awesome stuff. Appreciate you guys making your way. I renamed my portfolio The Real Brent. I like that. And then I've got Quick Notes Media. I got Media Mimi Donahue in the group here. Says hello. Awesome to see you. Awesome. I've been waiting for you to reach out to me, actually. So hopefully you do. I don't know if you popped in just to say hello and you're off the live stream, but yeah, I'm waiting to talk to you earlier. I got a couple things to run by you. You betcha. Did AbbVie post earnings today? I don't believe that they did. Cash Matic is in the group here. Says, "What's up, Ryan? Appreciate it. Love your inspiration and empowerment." That's the whole idea. And the cool thing about uh, inspiration is cool. Inspiration I can control and offer. Empowerment, I don't get to define that level of success over the channel. I don't get to do that. Okay. Um, I'm humble enough to put that responsibility on the folks that consume the content, and that's each and every one of the subscribers that make their way in, relate with a little bit of what I say. Maybe start to prescribe to the message a little bit and deploy it in a little bit. Take a look at it. Take a look at the information. Ask yourself if there's any aspect of your financial makeup that can use a little bit of work. If you think you're perfect, you're probably not. Okay? If you think you're perfect, you're probably not. If you have any questions on identifying some imperfections, ask me, because I do it to myself all the time. Okay, I've got imperfections in my portfolio, and I've been doing this a long, long time. The idea is that you never have it perfect. Okay, let me give you a little secret there. Okay, all right. When do you think these utilities will start to drop? They drop today. K9, what are you paying attention or what? I almost put a little dab. The utility single names I do not own right now. Fortis, I own a little bit in the first trade account, but I just own the utilities ETF. It's just I'm not feeling it. I'm just not feeling it right here. I think with the risk off, I think it was a sector rotation. I think money was flowing out of utilities and into growth today. That's what I think. I think growth was the beneficiary today. For sure. So I thought November 1 with BMO and AbbVie. Thank you, Hidden Freedom Investing, for that clarity. So look for November 1, be next week for earnings for AbbVie. Good stuff. All right. Good night, chat. Cashmatic. I love it. Chris Cobian's pouring a beer. He's got the kegerator going. He's working it, doing the bull dance. I love it. I think I may rename my channel. All right. Heard Charles Schwab just added fractional shares. That's interesting. I think I heard that this week as well. I think you're onto something, but I didn't think it was with Charles Schwab. Yes, it was. Yeah, I think you're right. I think that's exactly what happened this week. That's interesting. We'll see how that changes the game up a little bit. I think Charles Schwab's probably right there at the top for brokers. Fidelity, TD Ameritrade, for you new investors that are looking for account opportunities. Yeah, those are all good ones worth looking at. I moved from Merrill to Fidelity this week. Wow, Jared Odell, holy smokes, that's crazy. I'd like to know what prompted that decision to move. That's awesome. Great stuff, man. You have to do a rollover. I've done it. I encourage that type of opportunity. If you're not happy with a broker, kick them to the curb. You know, throw them in the gutter. Go buy a nutter. Do it. It's a pain. It's a pain to have to roll over to another broker. It takes about 5 to 10 business days, but you'll get her done. Hopefully, they can give you some incentive and Fidelity, because they may whack you a little bit in Merrill to leave. But anyway, yeah, I'd like to know why. If you don't want to declare that through the live stream, man, hit me up in the Facebook group. What's up? Grinder, laugh out loud. Won't go near that with a 6-inch pole. Yeah, don't do that, man. Somebody's already taken the grinder. You know that, financial investor. I almost gave it away to JMac Investing, but I was like, no, I can't. I got to retain that title. The funny thing about it is like, yeah, you're working really hard on YouTube. Let me break something to you, okay? This is not hard work, okay? Talking about my favorite topic on YouTube, I have a very regimented schedule to keep the daily upload schedule going, but this is not hard work. Come on, doing YouTube, I find that funny. I work so hard. I'm working so hard for my $50,000 a month. No, you're not. Get out of my face. You're probably not contributing a whole lot to society either. That's why I try to keep that message about YouTube, not MeTube, YouTube. Okay, that's what it's about. Jesus, get over yourself. Good grief, it's just a YouTube channel. Holy crap. Anyway, yeah, I'm the grinder. Yeah, I wasn't a self dubbed name. That came from a good friend of mine. So I'm the grinder until I relinquish the title. All right. They have a calculator on the trade page, but I don't think they're offering it yet. Okay. Interesting. That's really good stuff. I appreciate you guys sharing that stuff in the group. You guys are all monitoring the market and what's going on. So I really appreciate that. I've got Mike O here. Ryan, I know you're holding Nokia. Yeah, I bought that big dip. I thought about it too, actually, for sure. But God, I read some articles about Nokia, and it was like, God, they were like, there's no excuse, basically. I don't know what their problem is. They can't get out of their own freaking way. I don't know. You could probably take a nice swing out of it for sure. Did you see it recovering to close that position and reinvest? I'm holding, and I'm down a little bit. I didn't hold. I didn't hold a whole lot. It's in a smaller account. Had I invested in the big one, I mean, I probably could have put 1,000 share position on it to maybe double up the position. I'm not all about screwing around right now with that type of activity, so I opted not to. I'm exercising my right to hold the shares here. And do I think there might be some opportunity to some upside? Yeah, I do. I do. But we'll continue. I'm monitoring at 380. I've seen these things go south, and I have such a small position in it right now. If it does go back and return, great. I'm a winner. But if it continues down to $1 a share, I'll be glad I didn't try to double up that position, because it's just, I don't know. It's not up there in the top tier of quality companies. You want to try to play 5G, buy Verizon, for Christ's sake. Don't screw around. Verizon's been on a tear. I'm up 10% on Verizon. It's easy money, with a 5% dividend to boot. Come on, don't try to overthink this. But I like the question, and it's funny you mention it, because that thought crossed my mind too. It did. You know how I think. But good evening, everyone. Cesar from Fort Lauderdale. Awesome. Cesar Nunez, man. Thanks for popping in. I appreciate you coming on and being part of the live stream here. It's really awesome. Really awesome. Super stoked. I tried and it reverted to zero when I put 100. Okay. Chris Kobe, and it's hard to invest in something that loses its value when it just drive off a lot. Okay. Bing pops. Hello all. Robinhood feeling the heat. Saw a TV ad for the platform today. My perspective on Robinhood still holds. Take it for what you will. I wouldn't just come out and exempt First Trade and M1 Finance from that. But the collective opinion that I get from the community is that people are actually very appreciative of the M1 opportunity. That's all. And I've heard probably less positive about First Trade, but I don't hear a lot of negative. I'm on the platform. I like it. It does what it needs to do. But the scary question to ask, and for complete transparency, is, are discount brokers necessary anymore? You better like Robinhood a lot. It's a broker. There's no retirement accounts. That's enough for me to throw it in the gutter and go buy another. Okay? There are plenty of other options out there in the investing landscape. You don't need to be playing with a freaking 101 type of product when you can get the 405, man, with Charles Schwab. Okay? Come on, guys. Yeah. Go with a big broker now. They're freaking free of charge, unless you really like the opportunity with an M1 Finance that does offer retirement. And the folks that do invest with M1 Finance, they enjoy the aesthetics of the platform. And that's key, is that you enjoy the aesthetics. But I had a comment come through the channel tonight, the one that I pinned actually, which was from GW Life. Pinned it on the M1 Finance videos, talking about the hard time he's having with the single stock ownership within M1 Finance. I agree. I don't think it's conducive to that type of activity. If you're going to try to buy and sell single stock, you're going to be so disappointed with M1 Finance. That's just my personal opinion. Okay. Based on experience. I make videos on this stuff, guys. But anyway, I'll read quick notes. Media wrote me a quick note. It says, I truly appreciate how you share your knowledge, wisdom, and passion for others to gain. I'm all for that. Yeah, I've just got a lot of experience in this, made a lot of mistakes as well, probably wiser for it, and looking to provide that insight to folks maybe earlier on in their life. That would be really, really cool. I know there's folks that are making their way in and saying, okay, what's the story here? You'll get it. As long as you're part of the community and you found us, congratulate you. That's awesome, because we sure as hell don't get any help from YouTube. That's for sure. I might be screwing something up. I don't know. I might just be the worst search um, tagger in the history of YouTube. I don't know. Who cares? But I do have a pretty loyal subscriber base, that's for sure, which I wouldn't trade for anything. I called a B-Trade today, asking them if they were going fractional. The guy I talked to didn't know yet. I wonder if he didn't know what you were talking about, like fractional shares. What? That's possible? So Gen X investor, that's pretty cool, man. I think eventually all those services are going to be available, to be honest with you. And I'm all about it. Hey, we're on the right side of the argument for sure. I've been arguing this stuff for 3 years. Yep, I've been arguing this for 3 years. I've been advocating for the individual for a long time. It's part of the reason why I started the channel in the first place, is because seemingly all the large institutions have a hand on the amount of influence that they can have, and they have a big influence. A lot of people feel like that's the only route that they can go to seek out exposure to the market, and that's just so far from the truth anymore. They control the narrative. They'll make you think that you can't do it. I'm here to dispel that notion and tell you that you absolutely can, because you can. It's just the way of it. I may wait a few months to see what happens with the rest of the brokers. I would too. I need another retirement account that offers fractional, and I'm not sure M1 is it. Yeah, I got you. I respect that for sure. You know, the industry's changing for the better, I think. I'm excited to see where it goes. Anything that provides better opportunity for individuals and not large corporations, I'm all about it. Not really sure I am that excited about some of the backdoor stuff that happens at all the discount brokers. Um, I think the major brokers incur a lot more of an audit scrutiny, which is a lot more attractive to me. The reputation, going with a reputable, I mean, it's just your retirement guys, right? No big deal. Yeah. Yeah. Think about that stuff. Okay. All right. Let's I'm reading Peter Lynch. Once upon a Wall Street. This is a good one, Jason. Schwab has shaken up the brokers a number of times. That's correct. I've got investing with Aaron as well in the group, another channel creator. Get the shout out actually from me. Thanks for coming on and offering your question. I'm all in with PCG. So far, not doing so well. I'm down 67% now. And at this point, it is worth just holding and taking the risk with the rest. Can flip whether it goes bankrupt or double. Yeah, that's a tough position for sure. Yeah, it's tough, man. It happens. Jesus, nobody's immune to that type of activity. It's tough, man. It's a train wreck. Yep. You can predict the stock by if it's windy or if it smells like fire outside. Yeah. That's the fires in California. That's tough. Vincent Ramirez, I live up north and they're consistently sending us messages about shutting down the power. Yeah, they have to. Their equipment may have started another fire, and I'm playing good. I love dividends just as much as the next guy, but overall return is key. Tesla in the low 200s was ridiculously cheap. They almost went private at that's right. I remember that, a 50 billion valuation. Yeah, I remember that. That's an interesting comment. There's a lot there for sure. Return is key. For me, I would say this to that. Just to offer my perspective. I really like Ryan. Ryan was pretty cool, man. I got to meet him on a collaboration that I think me and him were trading some comments back and forth in the comments. I think for me, the bottom line is money. I really don't give a shit how I make it, whether it be through returns or compounding interest or capital appreciation. To your point, returns. I think growth for a growth investor is important. So, um, you know, um, cash flow would be key metric that you're looking at, obviously there. But yeah, I don't know. I always contend that this is a money game. It's a money game. But there's a caveat to that. How can you make the most amount of money by taking on the least amount of risk? That's my philosophy. I'm sticking to it. So appreciate the comment, brother. It's awesome. Oh, California utilities are at risk for sure. Scrolling down, I got Kenneth Noga in the group. See a bunch of folks that I don't recognize that popping in here. Maybe it's really cool. Some thumbnails here in the group. QE, that's not a QE, will make stocks go up. There's fear in the market, in my opinion. I agree with that, actually. I think there is too much fear in the market. There's a lot of money. Whoa. Oh, my goodness. That's the bad part about doing a live stream is you get a Charlie horse in your leg and you get to film it in front of like 1,000 people. So, oh my goodness. I just ran 3.5 miles tonight. My opinion, S&P was down last year. Everyone is waiting for a 2020 recession. I don't see euphoria. Um, wow, that's interesting. We'll see what happens. I actually think that there's been some interesting reductions in stock values going on for the last 18 months. That's what I see. Um, whether or not it's euphoria, I'm not sure. It just feels that way to me. It feels like people are getting very complacent on, the power of what the stock market can generate, and it can turn on a dime. It's funny what I've been able to observe is the market goes down a hell of a lot faster than it goes up, which is disheartening for a new investor, which is typically, my focus. Because I think guys like me and yourself, I mean, you're invested in Tesla, you got some cryptocurrency as well. Your risk tolerance is obviously elevated as mine is. I'm not worried about me and you. I'm not. I, I'm worried about beginning investors who just dabble and then they get scared off the market. And you say, well, okay, well they're not fit to be an investor then, um, potentially. But I always contend that if there's potential there for somebody to really turn the leaf and want to be an investor, that we find that potential inside of them. But yeah, I don't know. It seems like euphoria to me. We'll see what happens next fall when this election rolls around the table, and if this economy can stand on its own. 3 years ago, the Dow Jones Industrial Average was below 20,000, and 7,000 points on the Dow. The S&P 500 is just really, really cruised up, and we'll see what happens. I mean, it's worth having this discussion because you could be right, you could be wrong. Let's see what happens. That's the beauty of it. I gave up trying to predict anything. Yeah, I mean that's fair. The only thing you can really do is build wealth in the most responsible way that you can, based on what where you want to seek out that exposure, and that's the key. All right. Oh yeah, you'd be screwed if you have a mid cap growth name. Laugh out loud. Good job, Jay Greenspans in the community here. Good stuff. Euphoria will come with tech bubble 2.0, in my opinion, and want to be selling those assets in that climate. Nice. Mr. Tim Tellers, I have growth in my pie and M1, and I have Facebook, Google, and Amazon. What would you just suggest set this pie to? 10%, 5-10%. I know what the other holdings are, the good quality in the portfolio for sure. That's where I would be. Gosh, I see a thumbnail here that I haven't seen in like a year. Faceless HD. I can't believe it. That is awesome. Or a stock like Waste Management. Yeah, probably susceptible to not susceptible in a downturn. Very defensive. I haven't seen Faceless HD for a long, long time. Glad to see you pop in here, man. Awesome. It's been a while. Happy Friday, everyone. I hope everyone is having a great day so far. We are. I own iRobot as well. Yeah, good luck. Good luck with that. That's awesome. I want to, I want to uncover how some of you guys feel about owning this stuff on the flip side of the coin. And for guys like Aaron, I think Aaron's been investing a long, long time, and owning a position in iRobot, it may be justified when compared to other aspects of the portfolio. I just think for beginning investors. I mean, you want to own the S&P 500 and maybe put a cornerstone in the portfolio of iRobot. I wouldn't do that. That's just me. I have no desire to rush out and buy iRobot. I have none. I'd rather buy Goodyear tire. That's just me. We'll see. Actually, to be honest with you, I'd have to look at the financials on iRobot to really make that decision. I joke about it a little bit, but I find this all the time, man. Investors seemingly want to invest in a stock because they've revolutionized the vacuum industry by having the uh, vacuum your carpet while you're not home. That's just freaking phenomenal. You want to know what my brother's iRobot does? It jams up with dog hair so bad that it doesn't work. And it sounds like an idea that definitely couldn't be scaled, right? Another business couldn't come out with this product and just make it obsolete. I'm not really sure. My point is probably a very good company. Certainly you guys have looked at the financials and you guys are satisfied with where the prospects are and where it's going. I've played this game before, and perhaps maybe it's a reflection of how bad of an investor I am, perhaps, that I've moved away from trying to outthink everything and trying to find this needle in a haystack stock that's somehow going to let my portfolio outpace the market. And then when it does pace, I'm going to have that magic opportunity to sell the stock for 20, 30, 50% returns, and then magically loop into another holding just the same. Um, I typically just look at buying the best quality companies that I possibly can, and I've grown a lot of wealth doing that. That's more in line with my perspective, and usually get burned when I try to outthink the market. That's just my perspective. No more than 5% on risk tolerance for growth companies. Thanks. I was kind of thinking I was the only one in the group here who was not really an advocate of some of those programs. And it's not as if I'm not supportive of the owners of those portfolios who own those names. Don't get me wrong. That's not where my perspective is. I think investing with Aaron, for example, or anybody else on YouTube that are seemingly owning a little bit more weighting on the growth side of the house, again, it's not necessarily that I don't think you shouldn't own those. iRobot's a good company. Okay, it's a good company. If it fits into your portfolio, awesome. But my thought is, when in the beginning evolution of an investor should you start to own names like that? I think there's so much more preliminary work that needs to happen as you step into the market. But this is what dominates the conversation. What's the next best thing? And I think that's like the last 2% of the race. And you're trying to jump ahead and run that last 2% of the race without doing 98% of the preparation to actually enter into a stock like that. People focus way too often on the stocks that make up a portfolio, and they don't focus enough on the fundamentals of accepting that level of responsibility and wealth. Most people will fail at the stock market because of that. It's too bad. Any thoughts on Nokia? Seems pretty good value right now. Well, it dropped on a pretty poor quarter. I would say be careful about catching a falling knife on Nokia. So I'm holding my shares. I think I only have 100 shares of it. Not too big of a position. So I'm being careful with Nokia right here. I'm not touching it. I'm allowing it to work. Lowe's looks closer to fair value. Oh, absolutely. That's not even close. Those two comparisons don't even belong in the same category. What's funny about that is I like Home Depot better than Lowe's as a company, but as a stock, Lowe's takes the cake right there, and it has a lot to do with their Canadian business and their pet products business that they own and other companies, not the Lowe's buildings, but the other aspects of their business are quite strong. As a stock, Lowe's is absolutely the better buy here. Home Depot, in my opinion, is just overvalued. That's just what I see. So when I'm ready for IPO, I'm going to need your advice. Give me a shout. Absolutely. It's no problem. Give me a shout. I've really built some cash, but have been buying also. Me too. Do a little bit of both. What up, Freedom? Dividend growth. Do you normally do a stream at 8 on Friday? Or is that Rico? Somebody else is doing a Friday live stream? Nice. That's awesome. They should come on here and do a double collaboration with me. J Mac popped up. He's like, yeah, I'm in, man. That guy had 3 on his live stream this Wednesday. It was pretty amazing. It was pretty cool. Gen X Rico does one on Saturday. He does a video on Friday. Okay. I know I owned iRobot for 2 years and before Jeremy recommended the stock. Yeah, for sure. Interesting. It's a stock that I haven't covered. So I don't know a whole lot about it. It wouldn't be an area of the market that I would focus in on anyway, to be honest with you. Just 2 completely different perspectives, and no one more right than the other. I'll plead the fifth on that one for sure. You guys know my personal opinion on that approach. And again, it's in the eye of the beholder for sure. It's just having a huge influence on a lot of people. And there's going to be a lot of people that get burned. No doubt. No doubt. That's a for certain. I agree. Great. I'd rather buy Home Depot, but Lowe's is more reasonable. Yep. Yeah, I agree. Looks like a short squeeze in progress with pets after they reported not as bad as expected earnings. Lowe's is always empty compared to Home Depot. That's what I'm talking about. I just enjoy their stores more. That's why I'd be, you know. Anyway, Bob Wright says Jeremy knows some stock. Yeah, I'm not sure about that. And you guys should watch the early videos. Based on my assessment, he's still trying to work out of a $187,000 loss. That'll take the rest of his life to do. So, again, it's about the numbers, not about enthusiasm. All right. How many people covered on Tesla cleared out of that huge short float? Yeah, I missed out on BMY for sure. I was going to pick it up at 50, but didn't. Bless you for all your hard work and sharing your information. I appreciate that. That's a kind comment. Thank you. You would have bought booze with it. Good. Always a concern when I give homeless people money. Yeah. What I found out is that the more risk you have, the worse off you are. You could put 100% of your portfolio into big names, 1 to 2% per stock, and be better than diversifying into stocks that tank 60%. Oh, Jay Greenspan dropping some knowledge. I concur. Jesus. Stop trying to outthink the market, guys. Really simple. Okay? You're going to outthink it once, and then it's off. And you're going to do it again. And lo and behold, you're going to do it again. And then you're going to pick the wrong damn stock. And it's going to punish you. And it's going to affect your portfolio from a multi-year perspective. All right. You might buy drugs with the money. Good stuff. Giving is the reward. Anyway, any Walmart waste management today? I didn't. I'm pretty full in my industrials holdings, so I'm being kind of careful with adding. I've actually trimmed a little bit just to get some exposure off the table. So I almost bought Amazon when it was below 1,700. Okay, Bob, calm down. You don't need to be buying Amazon. Just chill out, man. No, I'm just kidding. I'm not your dad. Buy Amazon if you want. Just be careful. Jeez Louise. Like you could do 60% index funds, 20% growth stocks, and 20 in maybe bonds or something. If that 20% declines 50%, you just lost 10%, and now you're playing catch up. Nice. AK says you've got 1 billion subs. I like it. Good times to own Microsoft. Yeah, absolutely. I'm a proud owner of Microsoft. Would like to have waste management be a decently sized position. Seems to act inversely with my growth positions. Interesting. Waste management still too overpriced for me to buy. Hidden freedom investing. My cousin is an optimist. Nice. Oh, I love waste management. I agree on Microsoft. Just tuned in and saying hi to all from Canada. Awesome. Antonis Urbanus. Very cool. It's great to have you in the group here. Lots of folks joined the group from Canada. I love it, man. It's really cool. I think it will pull back though. I think I'd be in at around 104, 105. Quality over quantity any day. Thank you so much. There, I just had a bunch of comments dump into the thread here. Let me backtrack. Be glad it's dog hair and not any other byproduct. Exactly. You heard my comment about the iRobot vacuum in my brother's house with a ton of dogs running around all the time. Is Peloton the next GoPro? I don't know. I'm actually looking at investing in GoPro. See what happens. I can do a deep dive on GoPro and see if it's workable or not. We'll see. I actually like the product. I like the product a lot. I really do. I think it's pretty cool. All right, I got Lydia Santiago in the group here. Popped in. She's probably getting off work on the West Coast anyway. She always pops in later in the live stream. It's awesome to see you. Good evening to you, at least, or good afternoon to you on the West Coast. That's awesome. Great to see you. Thanks for coming in and helping. The big brokers need to add a pie and they'd be set. I agree. Do you look at cheaper markets like Hong Kong, for example? I can't say that I do. I did buy some international exposure in the Vanguard's ETF, not last week, but the week before. Bought 100 shares of Europe, VEU, I think. VEU, I believe, is the ticker symbol there. So we're good. All right. I would like to own some cat for sure. Yeah, Caterpillar, really thought that was going to really be problematic after that quarter. The quarter was bad. But there must have been enough there to let them know that it was okay, to chalk it up to the China exposure in Caterpillar. So hopefully they come out of it okay. Ran up nicely today. It was one of my outperformers today. Milwaukee Tools has made so many tools that they make hydraulic tools not needed anymore. Interesting. Ingersoll Rand owns Train and AM and HVAC. Look into. Nice. That's a great offering. Thank you, Stephen T. When is the next collaboration? I don't know. Somebody's got to hit me up and wants to collaborate with the Independent Investor channel. That'd be fun. Need to get somebody who needs like a portfolio review. One of the subscribers hit me up. That would be cool. Because you don't have to be a channel creator. I could do a collaboration with a subscriber. I think that'd be fun too. What is the best way to buy silver? An ETF? I don't want mining companies, but rather a metal play. I really think that if you're looking to buy silver as an investment, which I don't think that it is, the best way to own silver is in multiple denominations in the actual metal itself, with the intention that you will never sell it. So keep that in mind. Now, if you're going to buy it, you have an obligation to safeguard the metal. So keep that in mind as well. You also have an obligation to keep it secret. So just think about those things when you're looking to invest in precious metals, okay? All right. Tom Will. Expect the unexpected is so true. Learned that years ago. I don't know. I mean, there's people that have been around for a while. I'm addressing Tom Will's comment. He picked up on what I said. I don't know. It's lulling people to sleep right now in this stock market. It's really getting people excited about the market, and that's great. But I think it's, how prepared are people going to be? Just got to be careful. All right. Couple months downturn doesn't matter if you have a buy and hold strategy over the long term. Yeah, I concur. Got James Henry here in the group. For me, the crypto and ACB, I consider just money spent, like PPL may do at the casino. That's awesome. I wish I could have that luxury. I don't have the risk tolerance that you do. Either that or the bankroll. If you have bankroll, it's easy to have a high risk tolerance. But anyway, appreciate that. That's cool. Some people without a bankroll actually have that attitude toward money. I don't. Uh, I'm I'm as responsible as I can possibly be with my money, and through my attempt at being responsible in the stock market, I still make mistakes, and I'm willing to live with those as long as I abide by the rules that make sense for me in investing. That's the way I roll on that. Ramirez, we all make those mistakes. We learn from them. There's a mistake here. I think that's. Let me cruise up. Made such a beginning investor mistake and put the majority of my money into ACB. Never put all your eggs into one basket. Yeah, the solution there to not doing that is the ETF option, honestly. Get your money diversified. Stock investor guy says all money is serious money. I agree. I don't consider the stock market a game. I really don't. I think people want to say, well, it's so serious that I can't talk about it with anybody. But then again, we'll refer to it as if it's a game, and it's not. So yeah, I think it's a lot more serious than that. I really like PayPal. Yeah, from a stock perspective, I think it's good. The quarter was a blowout. It was awesome. I bought some 3M when it was down. I'm happy. Happy camper today. Good. Get off that. So you took the money that you were going to invest in Amazon and invested it in 3M instead. I'm proud of you. There's a value investor, Mr. Bob Wright. I like it. Nvidia's a fun story for me. Started buying it when it was around 22 a share. Even had a drip set up with them. Oh my gosh, you're sitting on a fortune. Eric Weber, one of my good friends in the channel, man, just left a pretty cool comment about his Nvidia trade. That's legit. Yeah. Yeah. How you feel now? That's awesome. Great job. Uncertainty always exists. How did you feel on September 10th of 2001? Yeah, I don't know. I remember I was an investor then, and I just, maybe it's my insight when I watch other YouTube channels, and it's really funny how they frivolously just throw money around, and it's like, this is amazing. And this is like, it's like free. This is awesome. Every stock I touch turns to gold. No, it doesn't. You arrogant prick. Let it go, man. It's just the stock market's tough, man. It's not easy. It's humbling. I agree, Ryan. Nobody knows where this market will head. Well, if it's going to head in any direction, what do you think it's going to do? You think it's going to continue up or it's going to go down? Let me tell you what, one of those answers is right and one of them's wrong. So it's going to do one of those two things. That I'm assured of. Okay. Recession or no longer, I'm investing the same 200 per paycheck. That's a good strategy. If growth stocks are risky, is a growth ETF a better option? Well, it depends. If you're seeking some growth in the portfolio, and I mean, I just told you I invested $10,000 in growth stocks today. I'm not saying growth is a bad thing. It's just I feel like all too often investors overlook the importance of diversification. So if you were really wanting some growth exposure in a well-diversified portfolio where you've got some other stuff working for you, yeah, you could do something like that. You could buy the ETF with all the growth names and be happy with it. But if you're going to pin your hopes on one stock, it's going to go where it's going to go. And the what I said at the top of the live stream, I really meant that. If you're looking to, put a large amount of your capital into growth, it's harder to predict where that could potentially go, and it requires a significant amount more management over that portfolio, which a lot of people are ill prepared, if not prepared at all to do. So look at other options. You don't have to try to, force yourself to do something that you feel uncomfortable doing. And I will tell you that you're probably ill prepared to do. So look at those products that will get you that exposure to the growth side of the house and be satisfied with it. Don't try to make investing something more than what it is, or something that you want it to be, but it doesn't have the potential to be. Okay. Because I can tell you what, any growth name that you enter into, any stock for that matter, any growth or value single stock has the real potential of volatility. Investing in single stock is a very volatile game. I don't care what you're talking about. So, all right. My invested profit is part of my reinvestment in creating another business and invention. Yeah, that's awesome. She's making an investment in herself. That's great. I love it. I love it. Just going to change the world. No big deal. I'm going to wake up one morning and change the world. She can do it too. I know. I know this. 100% confidence. How does everyone feel about MAC? I've been picking up shares. I don't know if you mean McDonald's. I almost doubled the position today. I'm holding my 10. I'm going to continue to monitor the stock. I may try to pick it up. I invest in your channel because you've helped me make thousands on profit. Oh, yeah. Yeah, you're doing good. You're doing good. That's what we like to see, man, helping folks. Really like it. Ryan watched your vid about the 10 stocks. I opened a slice on M1 with Kroger, Goodyear, Conagra, RCB 6, which was a drag for sure. Low PE, I agree. Good dividends and good long term, hopefully. About the performance. Thoughts on Nokia? I would keep Nokia out of that portfolio. A little bit more speculative. If you wanted to add another value name to that right there, that little mix, and you're trying to keep blue chips out of it, I mean, if you're looking for dividend yield, I mean, Verizon would fit really nice into that little group. I mean, I'm a nice owner of Verizon. Verizon's really nice, and it would keep your over than average dividend yield intact in that, Mike. So, thanks for the question. I appreciate it. Capital follows the highest returns. I love it. Good stuff. All right, let me cruise on to the bottom of the thread here, guys. If you want to hit me up real time, you can, and we'll finish this out. This was a two-seater. It was a two-seater. I would have anxiety attacks driving a small car on LA freeways. So GW Life just popped in. That's awesome. Did you get your pumpkin, man? Good stuff. Have some cider, some donuts. I gave you a shout out anyway at the top of the live stream, but I did pin your comment to my M1 Finance video. Thank you for that. Pretty cool stuff, man. Really appreciate it. So that's funny. I had a 91 Datsun 280Z with T-tops. Should have kept it. That's awesome. Good stuff, man. Cruise up. J Mac and GW going back and forth. Anyway, thank you for the input. Getting good growth on my little account and may protect from the U.S. downturn. Good. Good stuff. Just cruising up here and make sure I got Terry Harris from my bucket list country. I know a few people have still not got over the crash of 1987. Yeah, absolutely. There's some real talk there. So it always makes you come back to questioning the level of exposure you have to the market. I don't think it's an irrelevant topic to discuss with folks having a level of comfort with their exposure to the market. I just don't think, I think for the most part, most people shouldn't have everything that they own in the stock market. It's just, there's other assets that you can own to help out, grow your wealth, grow it responsibly. Lots of different aspects in investing in the portfolio. That's why I'm confused as to why people prescribe to one method. I prescribe to all of them. Now, the ones I don't prescribe to, Ryan at the top of the live stream was talking about some options there. I don't invest in options. That's one avenue that I don't exploit, but it's there. Precious metals, one of those things I don't exploit, but it's there, right? But I try specialty ETFs. I do dividend single paying stocks. I do dividend ETFs. I do total market ETFs. I do bond ETFs, right? So lots of different ways of trying to seek out exposure. Cash pillar, uh, in my TSP. That's another aspect of a generating asset that's generating wealth for me. So lots of different ways you can do it with your exposure to the stock market. I just try not to do it in one bucket. That's just what I choose to do. I've been buying McDonald's a little bit of time. Amy, me can share your vids on any platform from YouTube. That's right. That is correct. And for those who wanted international without any currency, Hong Kong market is very cheap right now. That it is. Hong Kong is cheap. REITs have had a good run this year. I agree. I like holding real silver. Financial foundations, I agree with that. I would add to that and say that I like to own it in multiple denominations if I can, because the whole purpose of that is to hedge against a severe downturn in the market and the value of those precious metals in easily divisible denominations. Large bar, junk silver. I like collectible coins as well. So lots of different variety to where if you actually needed to transact with it, you could. That's what would be attractive to me. All right. Dividend growth. Any idea about that, JMac? I never go on Facebook, but my analytics show me that I'm getting traffic from there, like my AbbVie video. Oh, I guarantee you're getting traffic from Facebook. I guarantee. Yeah, whether or not you like it or not. Anybody invested in REITs? So my exposure to REITs, I was looking at American Tower today, got really whacked. All REITs fell today, but my exposure to REITs are in the Vanguard's ETF. That's where I seek my exposure. The ticker symbol is VNQ. You can take a look at it for yourself. That's the only way I seek my exposure through REITs. I don't own any single stock. I just own the entire ETF. That's the better way to go, in my opinion. Low yield keep me from buying a DJI company. I've got Wandering Soul here. That's a new. Can you do a video on your strategy for a crash, if and when it ever happens? I don't invest to prepare for a crash. That's really really cool question actually. Um, I control my degree of exposure to the stock market all the time, all the time. And my comment, although a violent thing to think about, a total loss in the portfolio, which I don't believe is possible. Because anything's possible. But I do go through this deliberation to mentally prepare myself for the potential of a crash. How would my money react? I can tell you what I wouldn't do. I wouldn't touch it. I would just set a moratorium on the portfolio. I would look at how the crash, as you say, is affecting the different buckets, because my share base isn't going to go away. It's the dollar amount that's going to fluctuate. If I was going to play ball with that comment for just a second and say, okay, the total market, I wake up next week and the Dow Jones Industrial is at zero. Okay. The value of my shares is going to be zero. It's going to reflect where the stock market is. However, the one thing that is being missed is I'm going to have a bunch of worthless shares in my account. Okay. I'm still entitled to those shares, but there's going to be some aspects of the way I build wealth that's going to protect me or buffer me from that downturn. Okay, we're not even talking about SPIC, FDIC guarantee in the banks, right? There's probably going to be a rush on the banks, but the SPIC guarantee, I would highly recommend that you just Google it and read it for yourself, what you are and are not protected against. But there are some protections built into the market. And I don't believe we would ever reach that level of trigger to trigger that law and protection for individual investors. However, it's not necessarily a crash that I fear, for a lack of better terms. I fear it for new investors, for sure. For me, I'll be fine. I know exactly how to act in the event of a severe downturn. 50, 60% haircut, whatever it's going to be. 40 is pretty severe. 50% is like, oh my God. And then 60 is like, holy crap, can we end the damage, please, now? But I really just continue to beat the drum of controlling something that is very, very powerful. The market's powerful. The way that you control that is through diversification in your portfolio. Hedge your positions. Take profits where you can. For example, my Apple computer stock holding right now, I'm holding 12 shares. Okay. But as I'll declare to you guys tomorrow, I've got trading profit within that one name, Apple Computers, of $1,100. So almost half of that entire position is being invested in with house money. And that's going to be the lesson tomorrow, is to talk about building that buffer into specific positions that you really enjoy owning. 3M is one of them. And Apple Computers, that's another one. Intel. I'll run you through the entire list of the 121 stocks, that of which each and every one of those stocks I've channeled multiple times, 5, 6 times, sometimes twice, sometimes once. But I'll walk you through that. The idea being is that work has already been put in, and I've already manufactured those buffers within those positions. That's a really cool way of approaching investing. So when I took a lot of that risk off the table in my Apple position, half of that position right now is from money that I generated out of thin air. So if we have a severe downturn, I'll look at each and every one of my positions. And if I'm looking at an Apple Computers and it's down 50, 60, 70%, I don't know. I'm just playing the hypothetical in response to your question. There's some perspective that I have in that it's not all with contributed dollars to the portfolio. A lot of that is generated from a buffer in the portfolio. How do you find the best sales to put your money into? Long answer, but I'll try to summarize it in a lot of different ways. I'm one of those guys that actually reads ratings. I do. I think the reports are really quite good. Price to earnings, reflective of a certain sector, is important. Right now, financials are trading at really recessed price to earnings ratios, whereas some of the growth names, not so much. So picking growth is a little bit different metric. You got to look at some technicals. You got to look at fundamentals as far as cash flow with regard to your growth stuff, but your value stocks, typically looking at the ability of the company to pay and increase dividends over time, which is super important. And if you look at some of the dividend aristocrats that are offered on YouTube, most of the YouTube community are really good about getting this right. Um, and the key being that you kind of look at those stocks. For example, I mean, would you rather opt for McDonald's here at this valuation, or would you rather opt for a FedEx or 3M? You see what I mean? Where I would be more tempted to look at even Boeing with the problems that they have going on right now. Now, there's an example of a stock with some systemic risk, but McDonald's has had quite a run. It boom right up above 200, and now it's coming back, retracing a little bit. So just by nature of looking at the technicals of the charting, you can kind of see, look, am I getting this at the bottom of a chart of a chart trough, or am I looking to enter into the stock more at a high? So I do use charting. Charting is one of those things that I've looked at and relied on charting my entire life in investing. I really enjoy the aspects of. I don't do technical analysis. I've tried to study it. I think it's intriguing enough, but I can't get my head wrapped around buying a stock just by the picture that's on the chart. I can't do that. It's like, yeah, it'll work until it doesn't work anymore. Yeah, right. I'll be the lucky guy to buy a stock and it doesn't work anymore. But I do read a lot of ratings. I do. Bank of America, Merrill does a great job of offering those Morningstar reports. I do look at those. Whether or not a stock is overvalued, fairly valued, or undervalued, they tell you in the report. So they're doing all the calculations for you. And I find those reports to be extremely useful to somebody like me that doesn't really have the time to do all that back door work. And I found them to be very, very helpful. But when it comes right down to it, ask yourself, is it a name that you want to own? And when you start looking at a stock like Caterpillar, that question should be really, really easy for you to answer. Is it worth owning next week? Is it worth owning 10 years down the line? The answer is yes to both of them. And if you use that quality control check against a lot of the stocks that you're looking at, um, use iRobot, for example, not to pick on iRobot. Okay, let's just say it's the greatest company in the world. However, is it a stock that I want to own next week? Yeah. Is it a stock I want to own 10 years from now? I don't know. The vast majority of businesses go out of business, guys. That's the damnable misery of it. Two of the largest positions I bought today were in Cisco and Intel. Do those two companies meet the bill as far as that? To the best of my assessment, yes, they do. Pfizer, right? That's the idea. Buy the very best quality that you can possibly buy. Getting to the end of the live stream, guys, please, if you're in the group and you haven't hit the thumbs up button, I'm supposed to say that. I guess YouTube is supposed to give me credit for that, but I don't think they do. I want to thank all the channel creators for making their way into it. I want to take the opportunity to thank all the new folks that have made their way into the live stream via invite. A lot of fun. A lot of fun tonight. A lot of good back and forth. I want to give a special shout out to Ryan Giffen, who came in. That was a hell of a conversation. I really enjoyed JMac Investing, Gen X Dividend Investor as well, for getting the award for Leggett and Platt this week. I thought that took some courage to throw down on. And hell of a video, hell of a channel creator. Just I'm glad that that this opportunity has brought me to good folks like that for sure. GW Life got the pinned comment to the week award this week. So really great to see you guys. And we will throw down again next Friday for live stream 70, marching toward that 100 live stream goal of mine. Thank you so much. Appreciate you guys kicking on here. Have a great rest of the weekend. And please stay tuned for that video tomorrow. I think it's going to be a lot of fun for you guys to check out. I think you guys will find a lot of value in me going through and looking at that trading revenue within the portfolio. So guys, we'll catch you next week on the live stream. Thank you so much. Have a great, great weekend.